Bitcoin has dropped below $40,000 per Bitcoin. But in April, you should expect a bounce back up over 42,000. And that's what we're going to cover in today's video. What's the macro, intermediate, and short-term time frame? What looks very high probability is going to occur because it's given textbook chart patterns. If you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight into Bitcoin. So we can see with Bitcoin, we've got a major move to the downside. We got an up and then a down. So we're going to cover it on 3 degrees. So with Elliott waves, what it does, it allows us to read the psychology of the buying and selling behavior. And we are going to look at the macro. The macro really just means like the big picture view. What's the biggest wave count that we can see? That gives us a really large viewpoint of the psychological mood of this particular cryptocurrency called Bitcoin. So we're talking about a wave 4. So wave 4 is something like this. It's a big move, it's a big correction, it's a typical traditional profit-taking wave. So that's what we're referring to with macro, and is this down, so we can clearly see it's down and it's focused on a wave 4. That's my opinion of the market. And then we're going to move to the intermediate. The intermediate is basically saying, right, within this larger degree wave 4, it seems to be breaking down into a 3-wave structure. And if I make it even clearer for you on this particular chart, this is what we're looking for, the 3-wave structure. So the intermediate is really focused on this larger degree. Now, literally, it goes off the page, but that's not what we're going to focus on today, but that's the larger degree in terms of the intermediate is down, and we're referring to as a wave C over wave 4. That's referring to this, right? Because what you want to be able to do when you're looking at Elliott waves is read the subdivisions. The waves, and there's like a wave within the wave, and sometimes a wave within that gives us a really clear picture of what's happening in terms of buying and selling behavior. What we're going to focus on today is this one here, micro. So let's just get rid of this now. In terms of this, the micro is basically saying this larger degree wave C, this one here, this intermediate wave C typically breaks down into 5 waves. And that gives us a massive clue. And then the micro wave count is basically, this is what part of the wave C are we on? Are we on a wave 1, 2, 3, 4, or 5? And that gives us a really clear viewpoint. So we look like we're on a wave 1 of a wave C of a wave 4. Like what? By the way, if you're not used to Elliott waves and Fibonacci, we're going to use some Fibonacci ratios as well. Take my free Elliott wave masterclass because I cover the high-level subdivisions. If you click the link below, there's another click and you'll get taken to this page. Elliott wave and Fibonacci masterclass, how to read the market like a pro. You'll get instant access. And if you like it, there's a course at the end. We've got a massive discount happening. It's £97 for the entire course. And I'll break down everything for you in terms of Elliott waves, Fibonacci. I mean, take everything step by step so you can really understand the subdivision. So you can see here, look, it'll ask you to log in when you've created your account. And what I'm trying to show you here is it just breaks down, the basic Elliott wave rules, the rules and guidelines, the intermediate and microwave counts, and the macro wave counts. That's what we're focused on right now. This is the lesson here in the intermediate part. It's the macro, intermediate, and micro. That's what we're using right now. And it's very helpful to know that most markets, most of the time, break down into these clean wave pattern and wave structures. So what we're going to look at now is really this part here, this wave 1. It looks like a wave 1. Now we are going to go into one more degree of wave count, which I'll write it here. I will write it here actually. I'm going to do it like this, just so you're clear on it as well. You don't need 4 degrees of wave counts, but you can go sub-micro. It's basically looking at the waves within the waves, within the waves, within the waves. And sometimes this information can really give you a pinpoint accuracy of what's very highly probable going to occur. And more often than not, it will occur. And what we're going to look at is actually a wave 5. End of wave 5. of a wave 1, of a wave C, of a wave 4. Now this is really advanced. This is really, really advanced. You don't need to go into this much detail, but it's just very, very helpful, because often you can just ignore this one. You can kind of go, right, we don't need this one right now because this is like much more longer term. And then really what's really, really valuable to us right now in the immediate term are these two, right? This gives us a really, really clear picture of what's likely to happen because Bitcoin moves, right? It moves, especially compared to traditional markets. Like it moves 50%, 20%, 10%. In traditional markets, that takes like months and years, and Bitcoin can happen in pretty much days. So what we're going to now look at is, do we see a pattern on this part of the market here that will tell us, because what I said at the beginning, Bitcoin is likely to go back to 42,000 even though it's just gone below 40,000. Like, why would I say such a thing? Well, if we look at this, I'm going to deliberately not move the chart around. I'm just going to keep it here, but we can see this, and this will come with practice, is what this looks like to me is a nice wave 1, a wave 2, a wave 3, a wave 4, and it looks like a wave 5 is forming. And what we can use here in TradingView, this is the software, is we can go to sub-micro, and you can see it just allows us to see that this is a small degree wave count within this. And it looks pretty clean. It looks very, very clean actually. And what we're going to do is we're going to do something called an end of wave 5 target on this sub-micro count to tell us, are we going to see a short-term support level to get a correction, to get a bounce up? And after a 5-wave sequence to the downside, like this on a sub-micro, we should expect a movement to the upside, but we want to be aware that it's likely to be a correction and not impulsive. It shouldn't take this high out, so it's probably going to be something like this before we anticipate a further move to the downside, right? That's what we're looking at here. That's what we're really, really looking at here. So this high over here should not get exceeded, right? And then you hear me say the words should not in terms of its high probability but never certainties. So that allows you to have proper risk capital exposure. So what we're going to do here is I'm just going to get rid of this now, and I'm going to do something. I covered this in the masterclass, which is in the link below. We're going to do something called an end of wave 5 target. I covered the particular ratios in the masterclass, but what you're going to see here, there's these 3 particular ratios. End of wave 5. The most common is 38, 62, and 100%. These are the ranges. And we go, well, which one of these is likely to be the end? I just want to double check something with candles. Just want to see how wide these bars are. They're not that wide, so we can still use closing day data. It's pretty fine. What we want to know is there's another thing, which is when wave 3 is the clear extended wave, wave 1 and wave 5 tend to equal each other. They tend to equal each other. So that's going to help us and give us a clue. So I'm just going to measure this wave 1. Actually, I am going to use candles here. I just want to get the range of the bar, because we're using like intraday data. And the info I want here is actually the main one is this 100%. This red line over here. So this now just tells me that it's very highly probable. I'm going to get rid of this one. It's highly probable that will come towards the end of this micro degree or sub-micro degree wave count. And Bitcoin is likely to go as low as 38,000 to maybe even 36,000 range. But what we should anticipate, I'm going to go back to our line data because sometimes it's easier to see the chart, is I'm going to pull up let me get rid of this as well. I'm going to pull up a momentum indicator that's focusing on the immediate momentum. This is something called the stochastics RSI. I cover this in more depth in my course, how to use momentum in conjunction with Elliott waves, with degrees of counts, ideally at least 2 degrees of count, and then combining those Fibonacci ratios. What we will probably see is this go down for 2 to 3 days, and then on the next bullish reversal, it will probably be the end of this sub-micro degree wave count, and we'll end up getting a correction. So what I'm going to finish on today is we want to be aware there's likely to be a correction and not a continuation. That's the probability, which means we're going to have a window of opportunity, because Bitcoin is often I see it as so we're now focused on this now. But Bitcoin is often an indicator for the rest of the market. So it lets you better prepare, even just psychologically, what's likely to occur with the rest of the markets based on what's happening with Bitcoin, and then what you can prepare for next as well. So what I'm going to do here is give you my method to my madness in terms of why do I believe Bitcoin's likely to go back over 42,000. Very, very simple. We're going to make an assumption here that let's just say the correction finishes at this point. Could go lower. It might not even make it as low as this, but you see it's heading towards this over the next few days. Is what we can do is we can measure this high to this potential low here. If we do get a reversal, the most common is a minimum of 50%, as in the market will often bounce back up as a correction, but we want to know it's likely to be a correction, and we can see here the number is 42,000. But again, we want to be on high alert that this is likely to be a correction. Often, it will be something like this, a three-wave structure. Again, I'm going to go back to sub-micro, so we can see the wave count like this. It will often be something like this, and we want to be on high alert that this is likely to be a correction, a corrective high, which means if that is the case, we should anticipate lower lows being made, right? So we just want to be prepared for this so we can be 2 steps ahead of the market. So there you have it. So we've done the macro wave count, intermediate, micro, and sub-micro. You don't need 4 degrees. 2 degrees is more than enough. So just even knowing, well, at least these 3 or just these 2 will give you valuable information on what action you should be looking to take on the whole market, let alone Bitcoin. We've done some Fibonacci ratios, knowing that we are on an impulsive downtrend. And if we do get a bounce up, it should only be a correction, right? This high should not get exceeded. Very, very important, valuable information so you can best prepare yourself. So if you want to learn how to do Elliott waves and Fibonacci, take my free Elliott wave Fibonacci Masterclass. Is in the link below. I cover a lot, but the main thing is the 3 key rules for Elliott waves, how to do sub-degree counts, and then how to apply some basic Fibonacci ratios to the waves so you can have a massive edge in the market and seeing what's likely to happen next. So you have, I call it crypto tennis. You have a better probability of winning, getting it right, entry points, exit points, and managing your positions and your emotions correct as well. So if you like today's content, like, subscribe, hit the bell notification. We're going to finish on a quote. The quote of the day is chapter 3 from Mr. Confucius. Mr. Confucius, it does not matter how slowly you go as long as you do not stop. Most people overestimate what they can do short term and underestimate what they can do long term. Elliott Waves is going to be a very valuable tool for you, especially if you're looking to really take advantage of this phenomenal new technology called blockchain and cryptocurrency. There's a lot of innovation happening. There's a lot of new projects coming on. There's the next 2 decades is going to be a phenomenal time. It's like the internet all over again. But this token utility is a new thing. And being able to see, is it the right time to buy? Is it the right time to sell? Is it the right time to hold? Or is it the right time to stand aside and just be patient? Just be patient and say, look, I'm not in a rush. We've got a massive trend happening here. Just wait for the optimal market conditions, depending, especially if you're speculating on the market. Very, very important. So if you like today's content, like, subscribe, hit the bell notification. It means a lot to me, and I'll see you very soon.